Oh, damn. Look at that. Oh, tattoo. Oh God, Jesus, that's a trader tattoo if anything is, guys. We're gonna look at how to trade like a bank. How do the banks trade so we can take advantage of them. I'm gonna show you exactly an example of basically a summarized version of one of my strategies here that you guys can then use the logic of at least and then trade similarly to a bank and use this to your own leverage, create your own strategy based off of that. So make sure you watch the whole thing and hit that like button because you know it's gonna be good. Right, guys, so this video, I'm currently actually watching the Euro USD. I'm trying to get in some trades here. These are just some marks up from streaming here. If you guys are interested in watching those streams, there is streams that I do most weekdays that you can watch in on. So basically what we want to be looking at here is one simple thing to get you some logic going in how the banks are trading here, guys. Basically, what we're looking for is areas of liquidity where there's going to be obvious stop orders behind. These are very simple things like, okay, major pivot points or multiple highs, things like that. So there's obviously going to be liquidity above this one because that's a major pivot point. Right here I drew, let me just draw this line right here, right? You can see that. I've kind of made it a little bit messy here. So let's just delete all of this for now. And we could say, okay, let's break down the logic here, right? So a bank sees that we're breaking up on the Asia session here, and we're rather close to this liquidity area. So what are they going to do? We're going to start gathering, we're going to start consolidating around it. And then what they're going to think is, okay, they can send some buy orders in. And you guys saw a second ago, I had one of those diamond shapes, triangle shapes in that, because it's an idea of what I thought could have happened, right? What they want to say is, okay, if we're actually looking for shorts for today, right? Because the bias might be short for today, going into the Asia Open, once the Asia bankers wake up in the morning, they say, hey, how are we going to fuck everybody over today, right? So they're going to look for where people's stops are, and obviously they're right here. So what they're going to do is they're going to buy into those stops, right? And then what we want to do is, well, sometimes it's going to blow right through, right? Basically what happened here. But we were hoping that they would actually hunt them and then break back in. So what the banks say is they have so much fucking money that they don't want to ever take a loss. So what they have to do here is, this is the last area they're consolidating that they have to start buying up to. So they have buy orders now in the table. So let's say that this did dump down. Well, that means that what they had is they had sell orders all resting here, a large wall of sell orders. And essentially, you know, we could kind of see that that is still true. Maybe it's still true, right? Because we could still come down here, right? It's just a larger area than I first expected. We could still be coming down. We're not sure yet. And we'll look at it in a second. But there is a bunch of sell orders here. Now then what we say is, okay, it dumps back down. And at some point, they're going to want to take their profits, right? So maybe they're going to take their profits here at this area where there could be resting orders because that's where it bounced off. Or maybe they're going to take profits way down here or something like that. It's not too important, right? Maybe they're going to take their profits right here off that level. And this was the actual sell-off, right? So maybe it's actually, this is where they took their profits. Now, what that profit taking then does is create buy orders because they're closing their sells. So that's going to create buy orders, right? And it's going to start bringing it back up. Now, this is not a good case. This is not a good example. Let's actually delete this one. But let's say because they had their buy orders right here, so they sell these and then they take profit somewhere on the sell orders. Now, this is one case where actually the sell orders create more profit here. And now they can actually close these buy orders in a profit as well. So they've just made profit on two. Right? And then what that's going to happen is if they close those buy orders in a profit, that's going to create more sell orders. And then we can maybe take advantage of this move here, right? A more obvious situation is where we're going to look for something like this. We're going to see a dump off after just briefly sweeping, right? And then we're going to see them profit take at some point, right? We're not sure, maybe somewhere around here, right? And then what's going to happen is that's going to cause some more buys, right? Now, these guys, they're underwater the whole time. because they were buy orders. Once they get them to break even, then often you're going to see a rejection here, right? And then that's going to be the continuation. So once again, we're going to try to capture this last move here, right? We're going to try to capture that last move here, because we see what basically happens is we look for the liquidity. We say, okay, the bankers bought into it. It didn't just blast through. It actually dumped off. And then they take their orders, they take their profits. And then what we have to do is we have to make sure that we're actually able to enter on a short here. So we look for some sort of confirmation here. But this is all our confirmation. And then we take that last little ride of them closing these buy orders. And that's what we're riding, guys. We're trying to ride the closures of that buy orders. And then we're just going to take a quick little scalp, right? And this is how it's going to work, because then you're going to be able to put your stop behind there, behind wherever the level is. And then you're going to ride down that scalp. And then it's going to follow it down to the next level down, right? Something along those lines, right? Let's say we'll put it there. Let's say it dumped off there. So let's look for an actual example of where this happened. This actually looks like it's working right now in what we were just explaining in the first example. So what's happened here is we had this level of liquidity, we hunted it, we broke back in. They bought some buy orders here. Buy orders went into profit, and then they had those massive sell orders. They closed those sell orders in profit. And then that caused the buying, right? And then they could close these buy orders in profit as well, right? And then it's going to bring it down. Right? So that's another situation of what could be happening here. Let's look at an example of something actually working properly here, right? So here's an example on the lower screen here, the 5 minute. So we had some highs here, and right at the London close, right when the bankers were saying, okay, we're all done for today, we just want to do one last little trade. What they're going to do is they're going to hunt all of these stops right here. They're going to blast it up, right? They're going to hunt those stops. So this is where they bought from, right? So now they hunted all those stops and they left those in open trade. They left them as an open order, right? So now they had all these sell orders and they filled those right here, right? Give it another little test, and then it dropped back down because we weren't able to break through that massive wall. Now we dump back down here and they take their profit. Let's say this is where they set their take profits, right? Right down here at that level, right? That's where they took their profits, and they could have done this just as they were leaving as the London close, right? And they could have just set their take profits there. And then these trades needed to be closed at break even, right? So this is where they originally bought from. So let's just draw another box, and that's where they're going to close their break even trade. So they have one profitable and one break even, and then that closure causes the movement to go down. So this is what we're trying to capture, guys. So when you're seeing these hunts, this is basically what we're going to be looking for. Looking for hunts at major bank pivot points, right? And then we're going to look for the dump off. We're going to look for the retest of these areas of where they started buying from. And then we simply ride down the last little order there. Now, this is a very generalized statement here. It's not an exact strategy per se, but it's how banks are trading largely, right? This is one of the logics behind why banks are trading, or how banks are trading rather. So you guys can kind of create strategies based off of that and figure out in more detail how to do that. I'm not going to dive too much into detail in this video, but if you guys want more information, watch the streams. If you guys want to join a Signal group, link in the description. If you want to join a free group, also link in the description. Follow me on Instagram. See you guys next time.